Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me, Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But quickly, let's have a look at what the markets are up to. So, Cheryl, quite a different action on Nifty as well as Bank Nifty, because for the Nifty, we are still at the day's lowest point.
Absolutely. Very good morning to you, Shrishti. And also, let's not forget the monthly expiry also is at play, isn't it?
Yeah.
So that's why you may see such sort of a divergent moves, or for the matter of fact, volatile moves coming in for the markets. But there's one piece of good news that we must actually address is the fact that the IMD has come up with the monsoon update, and the fact that southwest monsoon has already set in Kerala and set in over Kerala, and also has advanced to most parts of northeast India as of today. Remember that we were expecting, or the IMD had given an estimate of May 31st is when the monsoon would set over Kerala, and it is 1 day in advance. But take a look at the markets right now. Definitely subdued in trade today. The Bank Nifty is seeing divergent moves, but hopefully we are able to see some sort of a recovery through the course of the trading sessions, Srishti. But let's move on, and let me bring on board my colleague Anurag Shah, who's standing by, because IRDAI has actually released a master circular on health insurance, specifying that the insurer an insurer will have to decide on cashless authorization within 1 hour of request. My colleague Anurag is here to tell us what are the other details in that particular front and how important is this one. Anurag, good morning.
So this circular is, IRDAI has come up after repealing 55 old circular, and after repealing 55 old circular in health insurance segment, IRDAI has come up with a master circular, and we can call it as a landmark circular also, because it mentioned couple of changes in health insurance space. As you mentioned that within a 1 hour, after the 1 hour of intimation, insurance company is supposed to give approval for cashless treatment. During the discharge also, within a 3 hour authorization is supposed to be given by insurance company, because most of us face the problem that after the discharge on hospital treatment, it takes so much time for completing the formalities. So now IRDAI has set up a deadline that within a 3 hours authorization should be given by the insurance company during the discharge. Apart from that, IRDAI has pushed up for the 100% cashless treatment. So the master circular clearly mentioned that all insurers should focus on 100% cashless treatment, so which will lead to fraud prevention, which will help insurance companies also and policy holders also. Apart from that, the no claim bonus. So now every policy holder will get a option if they are not availing any claim in a previous year, they can increase their sum assured, or they can get a discount in their premium. So this was not option available in health insurance, but now this option will be given to policy holders by all insurance companies. The customer information sheet, 1 page mandatory customer information sheet will be given with each and every policy, which will mention all details about exclusion, deductions, or what are the facilities. That has also been mentioned. The grace period timing, the 30 days grace period, in which if you are not able to renew a policy, all your benefits will continue. That has also mentioned in the master circular. The portability timelines has been made strict by the IRDAI. In the fixed timeline, the portability should be done. So these are the main changes IRDAI has mentioned in the master circular, and it will be a game changer in health insurance segment going ahead for the policy holders.
Well, thank you so much, Anurag, for getting us all those details. But with this, viewers, let's move on and let's shift focus to Neogen Chemicals, because this company is poised to have one of the first mover advantages when it comes to India's battery chemical segment. And to talk more on this as well as the outlook for the overall company, we are being joined by Hareen Kanani, who is the Managing Director of Neogen Chemicals. Hi, Hareen, very good morning and thank you so much for your time. First of all, wanted to understand what is the view on the overall demand scenario in the chemical business right now. You did report your earnings, but going ahead for your chemical business, how do you see the industry trends shaping up, and which segment is looking the most strong to you right now?
So in chemical industry, especially Neogen is basically serving agro, pharma, engineering industry. And also now we have just started our battery material plant. So these are the 4 industries that we are serving. So what we have seen As compared to last year, pharma demand has now slowly coming back. Already the specialty pharma was okay. Bulk pharma, there was a bit of a pressure, lesser demand. So that demand is now coming online. In agro, we are still seeing little bit of, we are still seeing the capacity, the demand to basically come in 2025. So the customers are basically saying in 2025, they will have a demand and they will start discussion, or because we make the intermediates, for us it will be second half of 2024. So somewhere around September area, we'll have a more idea on the demand on the agro. Again, but this year the demand for agro will be a bit slower, but hopefully next year majority of the demand should be coming back. If I talk of battery materials, we have two segments. One is the international demand. So we see very healthy demand there, because a lot of people who are in battery supply chain, because of US Inflation Reduction Act and various additional custom duties which are added, they are looking for a very strongly non-China supply chain. So there's a very strong demand for battery materials there. So our initial capacity, which is just coming online, currently is under approval, but once it's approved by the customers, then we are looking at good demand for our electrolyte salt business. And the Indian electrolyte that we are planning to make, there again the Indian customers are also now getting closer to starting the plant. So as they start their trial productions, we hope the demand for the electrolytes that we make also will increase in coming year and stabilize by next year.
Right. Very good morning to you, Mr. Kanani. This is Cheryl also joining in the conversation. And working capital days have actually increased in FY24 compared to FY23. Could you shed some light on this particular front and how it might actually change in the future?
So, basically last year, so originally when we did our capex in 2023, that's when we had basically set a target to reach full utilization level by FY25-26. We had already started increasing capacity last year, but then we saw the reduction in demand. So that we had to, recalibrate our plans and make some other molecules and try to shift from the agro-based demand to like more generic India customer base. So because of that change and we were preparing the plant for a higher utilization level when the demand went away. So because of that, we had our working capital was destabilized. But as we guided already in our conference calls, that we feel that by the time this demand recovers and we'll also have full utilization levels by FY26, when our non-battery business will reach almost 1,000 crore plus kind of revenue in the next financial year, the working capital also will get corrected and we should be back to our normal working capital, which is like around 120-125 days of net sales. And then going forward, as we further optimize our molecules, we can further improve upon that. When we talk of our battery business, which is coming online, so this is also, we don't have too many molecules like we have in pharma and agro. It's like lesser number of molecules. So there we expect the working capital requirement to be almost close to 90 days of inventory. So we feel as more battery contribution happens and our full utilization happens, our working capital requirements will improve from FY26 onwards.
All right, Mr. Kanani, since we see that there's a lot of interesting developments in your battery space, can you provide more details on the licensing deal with the NASDAQ listed company that is Nokonoko for the battery separators?
So this is basically Nokonoko is a technology company based in Japan. So they have developed separators which basically will help make cells which can perform in combination with a specific electrolyte design very good at high temperature. So as you know, India is basically a hot country, and majority of the technology which we are getting in India is coming from Europe, US or China, where the temperature, or Japan, where the temperatures are not so high. So we believe while India will start with first generation cells, which will be based more or less in line with what is international, but then eventually we'll have to have a second generation, third generation cell designs where the performance in Indian conditions will be better. So we believe that these separators which they have developed, they have shown scientifically that they work very well in combination with a specific electrolyte design at high temperature. So we are basically working with all our Indian customers that for your next cell, second generation, third generation cells, why don't you consider using this separator? So right now we are the exclusive distributors. Next 2 or 3 years, we will work with the Indian customers to see if they see the performance and the value in using these separators. And if they see the value, then eventually we can also set up a manufacturing base to make these separators and supply to our customers under contract. So it's, again, right now it's very difficult to predict any revenue coming out of that. It's far-fetched, but we are basically looking at to help get India ready for the second or third generation cells, which will improve the performance specifically in India conditions.
Okay, let's put the focus back on the battery chemical business. What's your outlook for that particular business, and when is the production expected to start?
So we've already started in our existing Dahej facility battery, the electrolyte salt of around 400 metric ton and electrolyte roughly around 2000 metric ton. So which can basically support, let's say, around 2 to 4 gigawatt hour of battery production. So that facility phase wise has been starting in last 3 to 4 months. And now we have some of the phases we have also started sending to our customer approval. So the commercial production also is going for approvals to the international customers. And what we feel that during this year, based on the approvals from Q2, Q3, you will start seeing revenue. And by Q4, we should have full optimization or full approvals for the entire capacity. So just that itself is worth around 200-250 crores of revenue. On top of that, additional salt capacity is coming, which will increase the 400 metric ton to 2500 metric ton. So that will also start contributing in the next year. And towards end of next financial year, our greenfield facility for 30 gigawatt hour will also come online. So that will also start contributing. So by FY27, we will have all these capacities available for full utilization levels.
All right, then we leave it there. Mr. Kanani, thank you so much for joining us on ET Now to talk about Neogen Chemicals' way forward going ahead and how the earnings were in the quarter gone by. Thank you so much for joining us on ET Now. And with that, we'll slip into a break on this edition of Buy Now, Sell Now. But here's a quick reminder for all of our viewers out there. Tomorrow, we have the Techie Special on Buy Now, Sell Now, where we'll have 2 technical guests answering all of your technical related queries. How should you position yourself when it comes to the big election verdict? How should you position yourself in the brand new series that will begin come tomorrow? So tomorrow is the day for you to send in all of your technical queries to our technical experts, and we will take it to them and get them answered.
Welcome back. You're tuned into Buy Now, Sell Now on ET Now, show where we get you answers for all your stock-related queries. And viewers, you can connect with us live on the WhatsApp number that will be flashing on the top of your screen, as well as you can also write to us on our social media pages of ET Now on X as well as Facebook pages. So we will try to take as many queries as possible, and to answer the same today, we are being joined by 2 of our very special guests. Vivek Karwa of VRIDHI Investment is joining us to guide you fundamentally as well as on the technical side. Kush Bohra is here with us. A very good morning to both of you, and let's start taking the queries. Then a lot of queries already pouring in. And Vivek, the first query is for you. This one is coming in on BEL. A viewer named Momita from Kolkata is holding 300 shares at a price of 225 rupees. Will that yet again be a multi-bagger in the next 3 to 5 years time frame, or does it make sense to book out some profits after the phenomenal run-up that we have already seen in this counter?
Okay, good morning to you and Kush. First of all, if you look at Bharat Electronics, in fact, I've been recommending this stock. And if you compare it with the peer group, it looks much more cheaper than other stocks in the defense space. So being a Sarkari company again, I think it should continue getting orders. Only wait is for the 4th June, what kind of government comes back. And if the same composition is back in, say, governance, I think the defense sector is going to really outperform. So you should hold it on and take it as an advantage if there is any fall. And in fact, you should add also.
Let me take the next query, who's coming from Prateek, who's writing to us from Goa, and he wants to know about Tata Steel, whether he should be investing at current levels. A very good morning to you, Vivek, as well as Kush. Kush, this one is for you. Tata Steel current levels, make sense to invest?
Well, it does. And, my confidence comes from the fact that even though the stock is below its 20-day moving average, seeing a bit of a profit booking, I think there is, the volatility is the name of the game, but there is certainly, an uptrend which is on, in the metal pack, especially Tata Steel. And this dip should be utilized as a buying opportunity. From, let's say, a medium-term perspective, a positional stop comes in at 155, where, the 20-week average resides. And on the upside, you could be looking at 185 and perhaps, higher than 200 as well. The stock moving higher than 200 as well in the coming months. So I think Tata Steel on declines is a buy. It's an add in your portfolio as well. Yeah.
All right, moving on then. And Vivek, the next query is from Akshay from Bangalore. He's holding 200 shares of SBI Card from the IPO. We have seen that since the IPO price, SBI Card has been a big underperformer, still not back to its IPO price. Will that be advisable to book out the loss at this point in time and rather move to Geo Financials? And his second query is, can you suggest a stock from the capital market segment for the long-term investment?
No, I didn't understand the meaning of capital market segment because the entire market is capital markets. Anyway, see, when it comes to SBI cards, I would suggest if you really want to be in, say, banking kind of sector, you can hold the parent company, which is SBI. Now, SBI cards did well in between, but what has happened is after the, penetration of UPI, the debit card business is already dead, first thing. And secondly, the SBI cards business also is dwindling. Slowly, the usage of cards is coming down. So it is just going to be a market performer. I don't see any kind of outperformance from here. And valuation-wise also, it is not that cheap. So between 700, 750 should be the range. So you can quit SBI and buy SBI Bank, the parent company instead.
All right, Vivek, from the viewer query was on the capital market segment. Any stock that you can suggest? What I could make is that stocks related, stocks like Motilal Oswal, maybe MK Ventures, IFL Securities, any of the pockets that you still like at this point, or maybe you can also touch upon stocks like BSC, CDSL as well.
See, if you really want to buy for absolute long term, okay, no wonder capital market is going to continue doing well for many generations to come. And I think CDSL should be the best bet in this space because there are only two depository participants, depositories in India, and CDSL is number one in that. So you really want to participate in the, say, the capital markets penetration, which is going to happen in future also, because even now we talk about, say, 8, 9 or 10% of people investing. This has to go till 50-55%. So that it is going to be a multi-generational growth which you're going to see. So CDSL should be the best bet. And on every dip, again, you should keep buying it.
This one is coming in from Anand. He's writing to us from Bangalore. IDFC First Bank, he's holding about 2,000 shares at an average price of 60 rupees per share. Vivek, this query is for you because he is referring to fundamental points which he wants to talk about. So he's saying, is it expected to reach 90 to 100 rupees per share in a year? Or should he exit and instead look to buy IndusInd Bank at current levels? Given that we are, monsoon is on time, we are expecting normal set of monsoon, so that maybe that will aid the auto financing segment. Or also, if the election verdict is favorable, do you think that banking stocks, any other banking stocks look attractive because of FII flows may come back?
So what I would again suggest is if you really want to be in banking segment, SBI remains to be the best bet. And if you look at valuations wise, even Kotak Bank and HDFC banks are good. When it comes to IDFC First Bank, what is happening is it is going to be a reverse merger. That is, IDFC is going to merge into IDFC First Bank. and it is going to become one single IDFC First Bank. This is known to the market, and the valuations at which it is trading right now is approximately, say, fair valuation. So, will there be hangover like HDFC merger into HDFC Bank? Yes, I think so. Another 6 months, 1 year, there could be a hangover after the merger. So, merger itself might take another 6 months. So, right now it would be avoid. I think HDFC, Kotak, and SBI should be the best bet if you really want to participate in banking segment.
So those are a couple of names coming in from banking space that you can look at. But Kush, coming to you, Ambuja Cement. This one is coming in from a viewer, Smita Vikram, who's writing to us from Bangalore once again. And she wants to know about Ambuja Cement. Her entry price was 646 rupees per share, which she bought about 2 months ago or so. She wants to know what sort of a strategy she should adopt right now, continue to hold on to the stock.
Well, she should continue to hold on. I think the dip that you're seeing in the stock is in the last 4 to 5 sessions more or less in line with the market dip. There's a strong support zone in the 610 to 615 range. So in either case, that should act as your stop loss from a risk management perspective. But on the whole, I think the stock is is in an uptrend. There is some consolidation. I think stock has a possibility of the trend to reach to 645 first, and once that is taken on to 660. So she may not be looking at very big profit, just yet. But I think from a medium-term perspective, the trend is upwards, and with a stop of 610, 615 kind of zone, I think she should be comfortable to ride the volatility also that the market is seeing currently.
Right, that's the day coming in on Ambuja Cements. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now. Let's keep it going with all your stock-related queries then. And Vivek, the next query is coming in from Gautam. And he says that he's eyeing 3 large-cap names. And if the markets fall post-elections, if at all, then which amongst these 3 he should go ahead and grab to have an exposure in any of these names? L&T, Reliance as well as HDFC are some of the stocks on his mind. What will be your advice on this?
Okay, first of all, I think markets will do well after election results. That's my gut feeling. And secondly, anyway, markets will keep going up and down. But out of these 3 stocks, if you ask me my first choice, it would be HDFC. Since I've already spoken on the show, HDFC Bank at these levels also looks good. Yeah, it might be a laggard for next 3 months, 6 months. That's a possibility because things are just coming back to shape slowly. But once it starts moving, it should easily show you 1900, 2000 levels. So which is almost like 23-22% returns, which you might get within next 1 year. So HDFC would be the first choice. Second, Reliance, and third, L&T.
All right, so that's the query coming in on the heavyweights then. And let me take the next query then. This one is coming in from Sushila Bellary. She wants to know about Inox Wind at a price of around 148 rupees per share, 320 shares of Inox Wind. She wants to know about the target for this particular counter. Actually, Kush, today, 6 months, the stock has seen extremely great gains. Over the last 2 days, the stock is under pressure because of the block deal that took place. The street somehow did not like the fact that the promoters had sold some of the stake. But what's your take coming on Inox Wind? What sort of a target should she keep in mind, given the fact her buy price is just exactly what the price is today?
It's rather delicately placed. The reason being that there's a gap at 160. There's an attempt that the stock will make at filling that gap, plus that is also a resistance zone. At the same time, if you look at it on a weekly basis, the momentum indicators are turning a little negative. So my suggestion here would be, since this is right at her buying price, not a bad idea to put, stop loss at 144 and hold on. It's a tight stop loss, but that's how the stock is placed, right? So keep a stop loss at 144. If that is broken out, exit. But as the stock keeps moving higher, exit towards that 160 mark, from where the stock could see some sort of a rejection for the third time possibly.
All right, so that's the take coming on Inox win, but let's just shift focus. You have flashes on the bottom of your screen for a while now. That is the RBI's annual report for the year 2023-24, and some crucial developments or crucial pointers coming in from that particular annual report. One is the net income for FY24 was about 2.11 lakh crore rupees. Remember, the government or the RBI also gave a dividend to the government to around somewhere around that sort of a mark. Also, the fact that the expenditure has reduced on a year-on-year basis, and there are other crucial points made on inflation as well as some bank frauds as well. My colleague Ankur is here to take us through all of those details. And Ankur, really interesting note coming in, or rather the report coming in from RBI, that's their annual report.
Yes, this annual report has all the answers why Reserve Bank of India transferred such a hefty dividend to Government of India. Now, as far as balance sheet of Reserve Bank is concerned, it has swelled by 11% to over 70 lakh crore. Now, it has reached to around pre-pandemic level. If you talk in terms of percentage of GDP, it is over 24.1%. Last year, it was 23.5% of GDP. But interesting aspect is that the income rose by 17%, but its expenditure decreased by 56%. Now let's get into details why it has happened. While all other like-to-like are showing similar kind of items, but one aspect is that this time the provisions have reduced in the balance sheet of Reserve Bank of India, and therefore the expenditure has reduced to 56% now. The surplus transfer, which has been over 2.1 lakh crore, it is almost equal to the net income which has been posted by the Reserve Bank of India this year. But the benefit of which Reserve Bank has got, it has got from several aspects, which is mentioned in the balance sheet. It includes gold, it includes the income which is earned through the currency. So all in all, a healthy balance sheet by Reserve Bank of India, and it gives all the reasons to transfer such a hefty amount to government this time of over 2.1 lakh crore.
So much for that, Ankur, for actually explaining to us what did the annual report actually consist of. And also, like Ankur said, it has all the answers for about the dividend as well as the balance sheet of the RBI, where RBI is also saying the GDP growth robust on back of healthy balance sheets of banks as well as corporates. So that is all about the RBI annual report. But let's shift back and let's start taking, or rather continue taking all of your stock related queries. Then let me take this next one. It's coming in from Dilesh Joshi, who's writing to us from Mumbai. He has United Spirits, about 70 shares of that particular counter at a price of 1,080 rupees per share. He wants to know whether he can hold on to this one for the longer term. What's your take on this one in particular, Vivek? For long term, USL definitely a hold, keeping in mind the lifestyle changes, or do you think that you can look to exit from this one?
Shiril, I have been holding this stock since 400 rupees, and I would continue to hold it for next possibly. I'm not going to sell it ever. So that's the kind of belief I have on the stock. Now, if you look at the spirits business, yeah, we keep talking about other smaller companies. I'm not naming anyone, but all with small market cap. But this company with 85,000 crore market cap is number one. Even today, the biggest hangover on the company is that it's known as Vijay Mallya company, but it is not so. So the day the company changes Diageo India as its name, I think the stock should really start doing well. And the company, from whatever mess and unclean balance sheet, the Diageo India has been cleaning the balance sheet, and it is almost debt-free company today. And if you look at the consumption of liquor, the way we compare GDP of the, income, same way, if you look at the consumption of per capita consumption of liquor, it's quite low. So company should really continue doing well. And in the last 1 year, they have almost sold the bouquet of products which are not that great and have focused on premiumization. So company should continue doing well.
Coming in on United Spirits. But moving on, and Kush, coming to you for the next query. This is coming from Sunita from Gwalior. She wants to invest in NMDC. Would you advise to make a fresh investment at this point in time, or would you advise to wait out for some dips? Because if you can see on the screen as well, there has been a phenomenal run up in the counter already.
Well, actually, as a matter of strategy, fresh investment just before a big event is never a good idea, no matter where the event goes. So that is something that, she might want to consider. Also, from a purely technical standpoint, looking at the stock, there is this round of profit booking which hasn't really come to an end. So a good time to buy would be when, the stock sees some sort of support and, attempts a rebound, which is not the case yet. While 250 is, a minor support zone, I think a proper support comes in at 240. Perhaps that's where the stock could, arrest this fall and attempt a rebound. So, between this zone, between the 240, 250 zone, from where the stock attempts a rebound, is where you should enter. On the whole, the view is bullish. It's just about the entry point. So, 240 between 240 and 250 should be a good entry point for the stock.
All right, so that is coming in for NMDC. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But let's not forget that Delhi has seen actually, and Noida region has seen high temperatures. But today there was a fire in Noida Sector 100. And on your screen are the visuals from the smoke billowing from a building in Noida. And as you can see, the blaze was caused by a blast in air conditioner.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And the next query that I have, Kush, is coming from Saji from Mumbai. I guess she's writing to us for the first time, and she wants an advice on Bata India, one of the earnings candidate, and she is holding 500 shares from a price of 1400 rupees. What's your advice for the next 3 to 6 months? Where do you see the stock headed?
Well, after the stark underperformance, the stock is, seeing a rebound. Very healthy that, there is, the key averages are taken out, perhaps the result impact where the stock has actually risen quite sharply, and holding ground. But I think now it's come in that, congestion zone of 1410 to 1440. Because the buying price is fairly close, my suggestion would be to hold on with a stop loss at 1370. Any up move towards 1440 and beyond will take the stock to 1470 level. So recovery after a long while and volume backed. So hold on to this one with an attempt with a stop loss of 1375 for targets of 1440 and then 1470.
This one is coming from Praveen, who's writing to us from Bangalore. He's bought Adani Energy Solutions at a price of 1,094 rupees per share, Vedanta at a price of 270 rupees per share. He wants to know what should he do with both of these counters. He's intending to be invested for the next 9 to 12 months in both of these stocks. What's your take coming in on this, Kush, about Adani Energy? 1,094 is the buy price. Vedanta is 270 rupees per share buy price. Attractive bets for both of them. What should he do now?
Well, Vedanta is seeing a sharp round of profit booking. So here you should have a stop loss, close to the 430 mark. The stock is very volatile. I mean, it does have a tendency to surprise on either side. So, my suggestion would be to keep a stop at 430, slightly deepish, but that's the support zone coming in. As far as Adani Green is concerned, the stock is consolidating within that band of 1750 to about 1950. I think this consolidation could perhaps continue for some time, but nothing to suggest that the structure is negative or anything of that sort. So with a stop loss of 1750, you could continue to hold Adani Green.
All right, Vivek, the next query that I have is coming from Ashok Kumar from Mumbai. He wants to know, can he invest in BPCL at current market price to take advantage of the bonus share? This is his first query, and the second one is on ITC. Is that a good bet for a long-term investment?
First of all, if you look at BPCL, what's bonus advantage? Instead of having 100 rupee note, you'll have 250 rupees notes. That's the basic fund of bonus. Yeah, the sentiment behind that is different. So bonus or no bonus, I think the stock still looks good. And post-election results, these companies will again start getting their freedom of price increase and decrease based on the free pricing policy. So the company should continue doing well, and it also would be a divestment candidate in the next regime. So that also is a possibility. So continue holding it. It's a great company, and I feel all the three oil marketing companies are good. The other company was
Vivek, your views for the long-term investment.
okay. See, ITC until they really demerge their hotel business, uh, stock might continue performing rather underperforming to just being a market performer. So I'm not very bullish after the recent run up. In fact, it went quite high and corrected too. So at these prices, I would put an avoid. Yeah, if you're looking at next 3-5 years, if the management is really serious and say demerges all the businesses separately, then the overhang of underperforming businesses would do away. So until that happens, I would put an avoid.
Right, the next query that I have is coming in from B. Soumya from Chennai, and she's asking about TTML actually, Vivek. She's purchased this counter at a price of about 93 rupees per share. Should she continue to hold on to it or book losses? Also suggests a good pharma stock that she can buy right now for the short-term period. TTML, a curious case, isn't it? Actually, Vivek, also let me take your view, because curious case, because the stock just saw a rapid rise. Maybe it was playing catch up to the rest of the Tata group of counters, because all of them saw a good run, be it Tata Elxsi, be it Power, be it Motors, all of them were rallying in trade. I think TTML fell left out, and that's why you saw that rally, or fundamentally there was a reason for it to rally. Vivek, first your take, then I'll come to Kush.
Fundamentally, I don't find any reason for such big rally. Now, what would have happened is, as you rightly put it, when all Tatas were going up, people just started seeing charts or say 1 week, 1 month, 1 year returns of other Tata companies which have not done well, and started buying that. So at 93 also, I think once I got this query and I said I would not say I would stay away from this counter, and that would be the opinion even now. So you can in fact book losses also and buy into other companies. So pharma, I'm really bullish. I think pharma should really do well going forward. So yeah, pharma should do well.
What's your take coming in on TTML in particular, as well as which pharma stock she can buy for the short term, given the fact that TTML, do you think the charts also reflected that sort of a spike in the counter underway?
Well, Cheryl, who knew even stocks could have FOMO, right? So that's perhaps that's the only reason why the stock moved. And look at the profit booking that came in. I can't even call it profit booking really. I mean, very few hands would have had this share. So yeah, completely agree with Vivek here. You know, this is an exit. No point holding on. 73, 74 is the level where the stock is attempting, support for the fourth, perhaps the fifth time also. But I don't see why they should hold on. So exit on TTML. As far as pharma is concerned, couple of stocks on my radar. Divi's from a momentum play looks fabulous. You know, the stock's actually seen quite a sharp run up. There's a recovery underway after a few quarters of underperformance. So Divi's is one stock that you can have on your radar, or rather from, let's say, a stability perspective. Cipla is starting to look good. The stock's run up quite a bit, but had seen a correction. And almost all of that is recovered. So there are a couple of choices for you between, let's say, a Cipla and a Divi's Lab. If you want to hold on or maybe add some more, in the pharma space.
All right, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query, Vivek, is coming from Chandrasekharan. He's holding MTAR Technologies, 50 shares, buy price is 26.40. At current levels, good to wait. He can continue holding it for the next 1 year, or would you advise to add more?
See, you bought it at absurd levels. Company is good, so no point selling at these levels. So it should consolidate and then slowly start moving. So just hold it on.
Canfin Homes is a stock. Kush, Padma Siva Rao wants to know, is it a buy right now for a period of 2 years?
No, wait.
All right, Kush, your view on LIC Housing Finance. Girish Iyer has bought 10,000 shares. Buy price is 677 rupees, currently at a loss. Exit and move to some other counter, or hold on?
The stock could attempt a recovery, hold with a stop loss of 615.
Shashi Kumar wants to know about Shriram Properties. He bought at the IPO price at a price of around 125 rupees per share. For the short term, what should he do, Vivek?
Short term, long term, both hold.
All right, Kush, a short to medium term view on Morapin Labs. Balaji is holding 200 shares. Buy price is 51 rupees.
Hold. A stop loss here comes in at 44.
Alright, this one's coming from Lakshmi from Hyderabad. KRBL, goodbye at current price for the long term. As well as Vivek, does it make sense to look at Edelweiss despite the recent RBI move?
I see when you're in markets, you should avoid stocks which are again totally market dependent. So you're not diversifying your portfolio. So I would put an avoid. Though it's a great company.
All right, Vivek, your view on Dixon Technologies, fundamentally how it is poised. Indu has bought these shares around 4,475 rupees. What should be her next move?
See, short term, I would be happy if there is a correction. Great company, EMS would continue doing well. So long term, yes.
Alright, this one is coming in from Subrata Ghosh about Nazara Tech. 850 is the buy price. What's the future for this one? What's your take coming on this, Kush?
It could continue to consolidate, and could see sideways movement. Support here comes in at 640 on the downside, and on the upside there is the resistance at 775 levels. Consolidation could continue for some time.
All right, but with this, fears, it's time's up in this edition of Buy Now, Sell Now. Thank you so much, Vivek, as well as Kush, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's time's up in this edition of Buy Now, Sell Now. Thank you so much for watching. But don't go anywhere. Markets at noon will take the action ahead.
And also don't forget that tomorrow is going to be the techie special on Buy Now, Sell Now. So do tune in to watch that particular episode, where we will be having two technical analysts who will take all of your stock related queries and also get you answers on what you should do ahead of the big poll verdict, as well as in the brand new series. So do watch that BNSN special episode with us tomorrow.
Friends.